Well, here we are at day 5 of week 11, and what we're going to do today is go over a couple of charts. First of all, we're going to go to Alliance Capital Management, which is a stock, and this is a daily chart, and we want to illustrate here how we would trade this, and we're going to, Tracy and Justine and I are going to comment about it. And the first comment that we want to look at is, what is the alligator doing? And Tracy, what do you notice about the alligator's behavior in this area?
To me, it's a perfect sleeping gator, and I'm very excited about trading. I also see a saddle point between the AO and the AC.
And Justine, you see the same thing?
I see the same, and I see that over to the left, you've got your up fractal, which is just outside, and you have a down fractal. At this point, you can bracket this market, and we don't care which way it goes, but we know after seeing a saddle point like this that we're going to have hopefully an explosive move. We usually have a pretty good move after we have that sleeping gator, so I'd put my orders in and just wait for something to happen, wait for the market to tell me what I'm doing.
At this point, would you have an order in? Would you have bought that or bought here, or would you be waiting?
No, actually, I would have, from the very first fractal, over here.
Over here?
No, the gray fractal, the first one we pointed to.
This one up here?
That fractal is where I would have entered the market from.
Okay.
Remember, I'm a little more conservative than some of us here. I would prefer to avoid a few whipsaws and catch the trend. I'm not saying that I don't take any losses or won't take a loss. I just like to limit my losses. Like I said, I'm a little more conservative. I like the market to prove itself to me. So I will take an outside fractal, and I would have been long there on the green bar. That would have been my first entry into this market.
And where would your initial stop be?
Now that the price has moved out of the gator's mouth, I would have my stop on the green or red line, which are basically the same at that point, right below. If you don't have CQG,
here,
you're not going to have the ability to go out into time. So many people are using TradeStation and MetaStock, so that's where their stop will be. If I had, since I do have CQG, I would be using the green line out in time.
Okay. And Tracy, do you agree with that?
Absolutely, I do. And I'm also noticing while the AO and the AC are both turning up, we're in the green zone. I would be using the red line at this point here.
Okay, so let's move a little bit further. And at this point, looking at this area in here, would you have been taken out, or would you still be there?
I would have been stopped out, and then I would have been right back in with that fractal. I've been stopped out on the squat bar you just pointed to, the blue bar.
This one?
I've been stopped out there, and then you notice that the next bar is a fractal.
Yes.
No, to the right. There you go, to the right. So I would have been right back in on the third day.
And notice also that the momentum is now in the green and the acceleration is the green, which is telling you that the market, the underlying structure of the market is going up. Not only is it going up, but it's accelerating up. Tracy, what would be your position at this point?
At that point there, I would also put in the fractal order, which is hit 3 days later.
Yes.
I'm also noticing that on the AO, we're about to take out the previous peak. These bars are now taking out the previous peak on the oscillator, so I feel that I'm in a third wave of some degree. So I'm very comfortable with using the green line or the red line as my stop. I'm also noticing that the AC is working on a peak as well. So I'm not really concerned with using 5 green bars stop here. Whether it works out better or not, I'm still going to use either the green line or the red line at this point.
This is an interesting situation, because if you had used the green line, you would have been stopped out at the highest low, and you can never complain about that. If you'd used if you'd used the 5 green bars, if you'd used the green line, remember the green line and red lines are always stop close only, you'd be stopped out there. If you use the red line, you'd still be in. So again, depending upon how you trade well, these executive decisions, which maybe seem a little confusing at first, after a while get to be almost automatic. So let's move forward a little bit then in time, and let's see what's happening with the market. Tracy, you want to talk about what's happening here with the momentum? You pointed out that this took out the momentum of the previous over here, and now we have an even higher momentum.
Now I'm again thinking that I'm in the third wave again. Oftentimes we'll be looking at charts where we think that we're in the third wave, and that ends up just being 1. Then the new third wave that we think that we're in ends up just being a part of 3, and we're in extended 3. So at this part here, now it looks like we're in a wave 3, and that's okay as long I'm more interested in knowing if I'm in an impulse rather than exactly what degree of the impulse. If I'm in an impulse, I could actually care less if it's 1, 3, or 5 until the correction occurs. Then at that point, it is kind of important to know what was the previous impulse, because if it was 5, then you may not be looking for another impulse. You may be looking for a move down. At this point here, it does look like we're in a third wave. We do not have any divergence in the market, and the alligator is allowing you to really maximize your profits here.
Exactly, and remember that this had a long nap, and the alligator became very hungry for bull meat, and the mouth is still wide open. So we would certainly want to follow any buy signals we got in this area, any of them that the market produced. And we have several saucer signals here, we have some AC signals, and we have a number of balance line signals. So during this area, you would become very heavily invested in this particular stock. Now let's move forward about a month, and we've taken all the signals, or should have taken all the signals in this up move, because we're outside the alligator's mouth. And you notice that the lips are beginning to turn here. And Justine, how would you handle it at this point? What would you do?
Well, at this point, you've been pretty heavily vested. I'm starting to see the alligator close, as you just mentioned. If you come down here, we see the AC has changed at this point, and look where your AO has started changing in here. So also, you've got the fractal on the top. Now, I don't have a squat in here, but this is a squat. So I would definitely have a green line stop. You've been in quite a nice move. The alligator's changing its formation. Your AO and your AC, your long, your acceleration, they're changing. So I would be ready to be a little tighter, a little more protective here.
Tracy?
Yeah, it's the exact thing that Justine talked about, that we have a good bit invested. We probably have an average price of about $6 worth of profit here, and with the bearish divergent squat bar, I would be looking to take profit at the green line as well. And as we go out a little bit further, you can see that was hit on the following day, and actually we had a little slippage there because it was stopped out a little bit below the green line. But with the move that we had there, that's average, and that's fine there.
Okay, let's move forward even more. We think we're coming into some kind of a fourth wave here. And as we see the fourth wave, this is the area that we do not want to trade. And let's go back out into here. Now we've been in a fourth wave for 2 months, actually almost 2.5 months. And we have all sorts of fractals up and fractals down. And Tracy, where would you place your stop here? You've taken profits, now you're looking possibly to get back in or just to stay out. What's your decision?
My decision here would be, because of the extensive third wave that we've had here, I would not really be looking to trade the down move here, because I know that 85% of my losses occur in the fourth wave. And this is an obvious third wave up here, and I'm looking for a possible fourth wave down. I'm not very interested in trading. And once the mouth has been sitting for a while, I would then may decide to take a down fractal. At this point, I would take the furthest out fractals, the fractal up here and the fractal down here, and just be very conservative not to go short until this point here. And my up fractal would be here. Justine?
Well, what I talked about in day 2 this week is how to not trade wave 4s or how to be there for the next trend. So absolutely, I would have a buy here. And as Tracy said, I really don't want to go against the trend. The overall trend is an uptrend, so I'm not interested in trading the A, B, and C in there. Now, if I were determined to trade it and just have to be in the market, this is the area where I would break down to a smaller time frame. I would trade this intraday, because intraday an A wave and a C wave are an impulsive move, so they're going to look a lot like the big third wave we had up. But other than that, I would be looking to go long next, because we know this was a third wave. We need to see a 5 wave, so wave 5 is going to be up here. Now, we never know the length of time a wave 4 is going to be. That's part of the problem. So in the beginning, I absolutely would have my up fractal buy here. Now, as things are going on, and as I start to be able to see an ABC pattern, and I still can't clearly see a C, but I might move my fractal buy down a little bit closer. That's your decision. That's definitely based on what I see in the market and my belief system. But to start off, I begin here, and I may come in a little closer because I want to make sure that I'm with the next move, but I definitely want to avoid all the whipsaw areas that have happened in the last 2.5 months.
One point about the Elliott wave and the fourth wave is that the C wave should have a peak on the oscillator. Here's your peak on the downside on the oscillator. This could be A, B, C. We will not be able to be sure of that until we see if the market takes the low at 24 out. If the market does not come below 24 and goes up from this point, this could be A, B, C, a 4. This could be a 1 up, possibly a 2 down, with a 3, a 5 to go up. And as Justine said earlier, may put a closer stop either here or a buy stop even here.
And one other point, since we're talking about where the market is in real time now, as this is being recorded, notice that the alligator's mouth is still pointing downward. The lips are below the teeth are below the mouth. One other thing we'd like to see is that lips and teeth get into the long syndrome before we get up. So we've looked at the S&P yesterday on a 5-minute basis. We've looked now at a stock, the Alliance Capital Management Corporation, on a daily. And what we're going to do next is we're going to look at a grain, and we're going to look at the November beans. Now we have on the screen the November beans, and notice that we have a peak here in the oscillator, which we at this point thought was wave 3. Notice also that the accelerator was moving up days before the momentum was moving up, and the momentum was moving up days before the price was moving up. So we suspected we were going into a wave 4. And Tracy, how would you handle it at this point?
Well, at this point, if I'm pretty convinced that the down move is a third wave, I would not be looking to trade the correction up. As I mentioned earlier on the S&P chart, because I do not want to trade the fourth wave against the trend, I sometimes miss moves. This is an example of not only I don't miss a move, but I stay out of a whipsaw. If I were going to take the up fractal, I would have been stopped in here and would have taken a small loss. As Justine said earlier, it's not that we don't like to take losses. It's for my psychological reasons, I would prefer to stay out of losses. We don't always stay out, but if we can minimize the number of losses that we occur, psychologically, it's very good for me personally. At this point, I would have looks like an ABC pattern, and we do look for that pattern at times. And once I see that pattern, I also notice that there's a squat up here on the top. And Justine, where would you enter that market?
To enter that market, I probably would have used this down fractal because it's the farthest out of the two. You'd have been back in here. When you got in, you've noticed that your AO has come back to the red to the downside, and your AC, your acceleration, has also come back down. So all the market conditions are there, and if you look, as Tracy just mentioned, you've got a squat at the top of that C wave. So everything's there telling me to get back in the market. The alligator's wide open. We're in the red zone. You've got consecutive bars, but one thing I want to point out, if you look at your oscillator peak, this peak has taken out the previous peak. So what we once thought was wave 3 is now really wave 1. This is a wave 2, looks like, and this appears to be a wave 3. So if that is true, I'm not going to use a 5-bar consecutive stop here. I want to stay in the trend. The market's telling me it's in a trend move, so I don't feel like I need to use such a tight protective stop. And out of all of us here are going to use the tightest stops because I am the most conservative. So let's go ahead and take a look and see what's happening. Okay, here we are to current. So not using that 5-bar stop was a really good choice in this, or executive decision at this time, because the market continued down. Now I'm starting to see a little change. What I look at are the lips. I look at the teeth, the lips, and the mouth, the gator. The gator itself is my lead indicator. And I'm starting to see a change of it pulling up. I see we have the peak here, the tallest peak. I see we have a down fractal, and we have a squat bar. So I'm going to be a little tighter and conservative, and I'm going to now move my stop up to the green line.
And that's a pretty quick summary, and I totally agree with everything they've said. You have divergence here on the AC, and we normally don't look at divergence on the AC. We look at divergence on the AO, but the AO has turned green now, which means that the market is now, the momentum is up, and it's accelerating up. One good way to practice this and to get familiar with this way of looking at the market is to go to your Investor's Dream, our proprietary software, where you can go 1 bar at a time, and it will show you the alligator into the future. Unfortunately, some data downloaders or some software does not show the alligator out in front. It's very vital that you do have that, because that gives you a pre-indication. As you know, we call this tomorrow's Wall Street Journal, this the day after tomorrow's Wall Street Journal, and this is even further out. So this tells you what the alligator is probably going to be doing 3, 5, and 8 days out, 8 trading days out. So that's a week and a half. So this is about the end of the week 11. Get ready this weekend and have yourself a very good pre-graduation date with your IT, with your InterTrader, and practice and do your AT and your IT and do your morning pages. Next week we're going to spend time on the psychological part, and while you're practicing, we also want to remind you that we're here for you. So if you want to communicate with us, you can do that very easily through email, through fax, and if you need to, through phone. So thanks again, and have a nice weekend. Hope you've enjoyed this week. We'll see you next week.